Hi, welcome to the Landore Resources Stock Analysis. Early stage explorer focused on Canadian prospects. And yesterday the big news was Eric Sprott took a 9.7% shareholding in this company. So quite an interesting development. So today's 21st of July. Let's take a look into Landore Resources. Tell me what you liked about this video. If there's things that I could improve, please let me know. If you like the channel, please like, comment and subscribe. As with all these things, it's not investment advice, it's purely entertainment and information only. The full disclaimer's at the end of the video. Thanks. So again, I just want to remind everyone that this is a purely speculative investment idea for myself. It's an early stage explorer, there's no cash flows, and therefore position size, recognition of risk, and still doing due diligence are kind of the golden rules. They're all there on the screen. Okay, so here's the agenda for today. We're going to look at Landore overall. We're going to look at the background considerations, take a deep dive into the BAM gold target, look at the prospective upcoming drill program, discuss the private placement, look into the management, do evaluation, and then conclude. So quickly, who are Landore Resources? Ticker LND, AIM listed. The share price, this is actually going back a week or so ago, as £1.08, but we saw an 8% surge yesterday as on the news of Eric Sprott taking the private placement positioning. Shares outstanding is 1,384,000,000. However, the placing adds an additional 414 million new shares and also creates new options, which we'll talk about later. So you can see that they've got prospects across Canada, the primary one being the Junior Lake project, which we'll go into in detail. And Junior Lake comprises of a gold discovery as well as some iron, nickel and lithium deposits as well. Most of this information has been taken from the Landore Resources website and also the Cube Consulting report, December 31st, 2020. So there's about 200 pages on the Cube Consulting report, high quality in-depth analysis, which I would thoroughly recommend reading if you're serious about the project and about Landore in general. I certainly found it very informative. So a quick look at gold price. 1800 gold price, 5-year high. Looks like the macroeconomic environment of QE and COVID will continue to drive that higher, or at least solidify that position. Thinking about something that Marin Katusa said, Canada is one of the countries that has a dollar swap line with the United States. When trading in US dollars, this is helpful because it eliminates one of the risks that a country which doesn't have that US dollar swap line, which could end up with a liquidity crisis, starts to repossess the assets, the only assets that are producing in dollar denomination, and change the tax rules and maybe even take over and nationalize the asset. That's extremely unlikely in Canada, which makes Canada one of the reasons why it's a really good jurisdiction. And the selection for gold price for the valuation of this asset is really critical because it has a massive impact on how valuable or not valuable the current discovery is, and we'll go into that in a little while. So let's look at Canada and Ontario as a mining jurisdiction. So here we can see that there's 38 producing mines in Ontario. 28 of them are metal mines as of 2018, and there's 17 gold mines producing, and there's a huge amount of further prospective mineral deposits and future mining projects in development. Canada was recently ranked the 3rd most attractive country to develop mines in. Although one consideration could be the permits. Permits have been taken an increasingly long period of time. to obtain, and when we're in the the early to middle stages of a gold bull market, which normally has an exuberance period and then it falls back, the question that I'm asking myself here is, can anyone bring this mine online or sell it to actually a mine developer in sufficient time to capture the full value at current gold prices? So that's something any prospective investor would want to consider and do their own assessment and due diligence on. The other thing I find quite interesting is the location of this deposit. It's not particularly close to any of the other active mines at the moment, and the reality is to process some of the gold ore and such like, it probably requires driving and trucking the material down to Thunder Bay to be processed, which you can see down there near Lake Superior. But overall, I think still Ontario is a good mining district. It's got expertise, it's got history. Canada's a good safe jurisdiction, so there's much going for it. I think more going for it than going against it. Okay, so let's take a look at the Junior Lake property in which the BAM gold deposit has been found. So you can see there that there's basically kind of a relatively low grade million ounce discovery made in the centre of the map. What's quite interesting here is if you look left across the course of the diagram, there's actually multiple similar geological formations which would indicate that there's more gold deposit, and we'll get into looking at that in detail shortly. You can also see that there's iron, lithium, and nickel within it, but it's actually quite difficult to obtain specific details on how viable any of those other deposits are and what the scale is, and in fact what Landore Resources hopes and plans are for the non-gold related targets within this particular site. They've done a PEA, preliminary economic assessment, which was delivered in December 2019, indicated 747 ounces of gold and inferred a further 268. I think what's highly interesting around this gold deposit is it's extremely shallow. It makes it suitable for open pit. Although it's low grade, the recovery rate and the what you need to do to extract the gold once you've mined it, the leaching process, etc., is quite straightforward. And that economic assessment shows that the gold discovery is open to depth and open along the strike length, which makes additional gold discovery possible. It certainly doesn't limit it to the existing amount assessed. It's built on Archean greenstone belt, which runs from east to west. It's presumed to be a mesothermal deposit in sheared rock, and there are further gold targets to be explored, which we'll show you later. Okay, so Archean-AGED mesothermal gold deposits. What does it really mean? So we've got these greenstone hosted vein deposits. The left-hand diagram actually is specifically from the BAM sequence, and we can see these veins that are generically described on the right-hand diagram, and you can see the existing drill program that the PEA was based on, and you can see that it's picking up the host rock with the mineralization in it, which is quite interesting. And we can also see, interestingly, that the grade gets better the deeper it goes, and it's open at the bottom. So I thought that's quite interesting. Also, the depth is pretty minimal. It's definitely open pit, low cost extraction coming from this particular deposit. Just a couple of screenshots I pulled out of Google Maps. So the site location is shown up at the top of the of the diagram, the two yellow markers are the two prospective pits where the gold mineralization is located, and Thunder Bay is down about a 5-hour drive, 350 kilometers down south. So it's relatively easy access. There are some unpaved roads close to the site which need to be traversed, but there are existing unpaved roads right up to the site. It's pretty well developed. It's about 13 kilometers for the nearest electricity lines to where the site is, which are basically about 13 kilometers south, going towards the lake that you see there. And here in the embedded picture in the top right hand side, we can see that this gold deposit is basically made up of two areas of mineralization, which they've classed as West Pit and East Pit, and you can see that there's they've already identified areas where they can do milling, tailing, waste dump and a camp, which is quite good. So let's look at the PEA. I'm not going to go into detail into this. Really, this is where valuation becomes important, and people need to think very carefully about the assumptions and the assessments that are made here and decide whether they make sense for themselves. But I'll just pick up on some things which I find interesting. So first of all, the gold price, they're still using 1,500 an ounce. So there's potentially upside there if you believe the current gold price is sustainable. And the all-in sustaining cost, $800 basically, just over, which means there's a good margin, and as gold price increases you get the leverage on the gold price, and the IRR is pretty healthy, above 40%. Personally, I'm not really interested in a PEA if it's lower than 30%. I think that's kind of a threshold that I think sometimes when it gets close to a payback period of 5 years or more, then I always worry that the assessment is kind of manipulated slightly to bring it inside the company boundaries, or inside the threshold an investor would like to see. I think when there's clear water between the kind of minimum expectations you need for financing and the IRR, then it kind of says to me that, you know, there's not really any there's not any kind of fudging going on, which hopefully is good, and it gives a margin of safety as well. So looking at the BAM resource, top right and the centre one shows the existing gold discovery and how it looks. There's it's open to depth. You can see the plunge angle, but it's also open east to west as well. The biggest spotlight shows further to the west. There is soil gold trends which follow the run of the greenstone belt, which is hosting the mineralization, or that's what's assumed based on the soil sampling and also kind of the air surveys that have studied the electromagnetic strength indicated under the rocks. And this is going to form part of the exploration which is going to come later. So in terms of potential upside, it's quite interesting, and I think also what makes it interesting here is if that greenstone belt continues to be at surface level, then it makes the continued extraction to be able to be possible in a similar form, which I think always makes it more straightforward, that you're not having to deal with, you know, block caving in one area, underground mine, you know, surface mine. All of that, you know, basically adds to the complexity and the risk associated with making the extraction. So here's the upcoming drill program and the estimate that's been done for it. So there's an assumption that you need about 6.3 million Canadian dollars to basically do the next drill program. What it does, that drill program basically, is it infills the existing site to get more clarity on it, and it also does further exploration on identified gold targets. So another 4,000 meters for depth, another 3,000 meters infill, another 3,000 meters extension to really expand and also quantify the existing gold. So what does that mean? Canadian into sterling, that's about 3.6 million based on the exchange rate I've put there. Here's a detail of the private placement. So another 414 million new ordinary shares were placed for a value of 0.675 pence per ordinary share, which at the time of placement was 7% discount to the market price. Now it's almost half the market price, so the private placeholders are getting a really good deal here. It's raised 2.57 million sterling, 4.3 Canadian dollars. I really wish that they'd raised the full amount for the full drill program. What worries me a little bit is they're going to do another round of equity raising, and that will come with more warrants. It'll come with more discounted shares being created to get that investment, and making an investment now as a private investor. Just worry how much dilution I'm going to get in the future. But the placing of those shares adds approximately 23% to the overall share capital. And then what's interesting here is for every share that's been created, a new warrant, one warrant for one share has been created. So if someone exercises those warrants, there's another 414 million, shares that come on, and further dilute the overall proceedings. So it's kind of a worry. I've tried to model what I think it means when I look at the full dilution. But when we see that they need 6.3 Canadian dollars, we know now already, and we need to be ready for the fact that there's going to be at least one further round of raising investment, and probably more, to be honest. Once that one's over, there may well be further drill programs, because these drill programs, I think, make sense, certainly, but they're not enormous, and I'm not sure that it'll exhaust all of the gold targets that we have. So, we need to kind of be a little bit mindful of this. And I think looking at the share structure, warrants, options from insiders, and understanding is the major insiders and Eric Sprott, are their interests aligned with the interests of the common shareholder, is one of the biggest questions that I'm asking myself, and I would ask myself on any junior miner, basically. So let's look at the management and corporate structure. So Bill Humphries and Richard Prickett have a history together. They've done 3 different businesses beforehand. I found it quite interesting that Richard Prickett left at the start of this year and left the Landore Resources board and was replaced by Glenn Featherby. I couldn't really get a handle on what created that and what drove that change, and whether it's positive or negative. But I just found it interesting, after doing all these businesses together, that partnership basically split up. I think what's positive is you can see that Bill has a history of previous gold companies who he has developed and sold on. So I think especially Brancourt Holdings is interesting, because you can see Brancourt US Inc. being part of the corporate structure of Landore Resources as a wholly owned subsidiary. So the share structure is built up as described on the right hand side. We can see there that Lamount Iron Inc. is not wholly owned, it's 90.3% owned. I really am interested why Lamount Iron Inc. is a separate subsidiary and why it's not wholly owned. And I'd like to know a lot more about the iron deposit in general, but I wasn't able to find much detail on that. So if anyone else has been doing research on Landore Resources and they have details on Le Moune and the iron deposit, I would be really interested to be directed to information around that. That would be fantastic. But in general, I think it's relatively straightforward. And as I said, we've got mining executives who've got a history of developing gold projects. And we've got a question mark over why the shake-up at the start of the year, especially after the positive PEA assessment coming out in December. Timing was a bit weird, and I'm always asking myself questions why those type of things happen. There might be genuine reason for it, and I have reached out to Landore and sent them an email with some questions. And I'm you know, I can't say negatively or positively why that happened. It's just an open question that I'd love to get some clarity on. So let's look at these drill programs. Yeah, what you can basically see here is as we move west, you can see these electromagnetic targets for future drilling, which are clearly highlighted, and it could go further than what they've already surveyed. So those are the drill targets that are part of the drill program that they've just raised equity to try to extend. Here you can see it a little bit in more detail. You can see the existing original pit shell, and you can see the targets that they want to explore. So I made a rough estimate based on this diagram, and believe that there's, let's just say from a surface level area perspective, there's almost double the existing 2 pits in terms of drill targets that they're aiming for. Now there's no guarantees that they'll yield anything, or whether it'll be similar, better or worse at this stage, but just simply to say in terms of order of magnitude, that's kind of what we're looking at. And if I was looking at a very optimistic case, then I would be assessing it as being something comparable. Here's my valuation. What I've done is I've taken all the shares outstanding, all of the warrants, all of the options, and what I believe to be the need to future dilute the shareholder to finish the drill campaign up to the 6.3 million Canadian dollars needed, and basically expanded the total shares in the market by that full dilution to give me kind of the worst case scenario in terms of dilution. Now of course that's based on the current drill program, and as I said before, there could be further drill programs which could require even more dilution, but the assumption would be that would only happen if positive results came back from this drill round, and if they got positive drill results, then the mineralization would compensate for that. So at the moment I'm only expanding the shares and the share structure to compensate for the current drill program. I've used the base case out of the PEA assessment and the extended case out of the PEA assessment, and then I've used what I've called the ultra extended, which is basically an assumption on doubling the current extended case through the new drill program, which is, just to be very clear, highly speculative, ultra optimistic view on life, and certainly wouldn't be my starting point in evaluation. But I think what's quite interesting here is, because all the valuation on the PEA has been done at 1500 gold, it tells me that even in the base case, the fair price per share is about 3.8 pence per share, and trading now at whatever it is, 1.07 to 1.2. Before and after Eric Sprott's name was released yesterday, we can see there's still potentially some upside. For these highly speculative gold positions, I use a 50% margin of safety, which would take it down to 1.9 pence. It's still interesting. If I look at that base case, it's not super exciting, but it's still interesting with a good margin of safety and in a good jurisdiction. It's quite interesting. But when we start getting to the extended case, then the upside becomes more interesting. And if we think about gold at 1800, it has a considerable impact. So, you know, I really can't make my mind up whether this is a stage of development that's interesting for me or not. I think it probably could be, but I'm just waiting to kind of let the dust settle on this latest share placing before understanding what to do. But we can see there that there is potential upside, and I think the potential downside is relatively low. If gold drops back to 1500, then you've still got a margin of safety, and the type of extraction is quite low cost, low risk in a good jurisdiction. So, you know, relatively good potential upside, relatively limited downside. That asymmetric risk reward is kind of one of the characteristics that I'm looking for. So it's certainly on my watch list. So here's kind of the conclusion which I just jumped to. Good jurisdiction, good resource potential, experienced management, low all-in sustaining cost, and there's been some momentum, you know, from the PEA in December to a private placement with Eric Sprott within the last 6 months. It's moving quite quickly, you know, and I think there's, you know, a catalyst for this to improve, which is good. On the downsides are some of the concerns. It's still very early stages. I think generally it's still quite a small discovery. You know, it really does need expanding to become super exciting. And there's been a relatively lack of publicity and exposure up to now. And I'm hoping Eric Sprott's investment is going to raise the profile a bit of the project and of the company. I'd love to see the management do some publicity and marketing kind of approach. I think now is the time that should be upped. And I do, probably my biggest risk is I'm still worried about high risk of further dilution and whether the existing shareholders' motives are aligned with the common shareholder when they've acquired options and warrants at significant discounts. And then it's timing. Can the opportunity to be developed fast enough for the bull market? You know, I think if they sell the prospect on to a larger medium tier gold producer, then I think the timing's probably perfect. If they want to actually turn it into a producer mine, I'm not sure they'll get the permits fast enough for this bull market, and you know, it could become one of those assets which gets put back on the shelf and the stock drops. So that's what I'm kind of really interested in is the timing effect. I don't think the gold discovery is big enough to attract a major. I think at the moment it would really only be interesting for a mid-tier, and even then, I think the resource needs to be developed further. And I think my assumption is management think that too. That's why they're pressing ahead quickly with getting equity to do a further drill program. So it's really interesting. I'm still on the fence. I'm not a shareholder. I'm going to continue to watch it. I'm certainly going to be looking out for the next drill program. I put here the announcement of the private placement, but that's happened yesterday, so we know that, and I think that generally was positive. So an interesting junior, AIM listed. I'd very much like it to land on Freetrade and on Trading 212. I think would be really really good, and it would allow me maybe just to take a small position without worry of fees and such like, just to get a little bit more interested before, you know, taking any kind of significant position. But yeah, I enjoyed it, and I wonder what everyone else thinks about Landore. Please drop me a comment and let me know what you think. Yeah, if you liked the video, comment and subscribe. And as with all these things, here's the long disclaimer at the end. You know, your investments are your responsibility. The information can't be verified. It's not an advice or recommendation. Carry out your own independent research. You know, assess your own data. Try to determine the facts. Seek professional advice if required. You know, all investments have risk. the price of the shares can fall as well as rise. And disclosure, I don't have any position in the company presently. I'm not a shareholder, but nevertheless, this is really a disclaimer to say that it's your risk and you need to manage your own risk. Thanks a lot.